So nice to meet everybody. Now, before we start quickly, I'm just going to lay down a few guidelines that will help us understand the course better and that will help us have very, very productive classes. Now, I will appreciate it if we can have an interactive class. Yes, so I want a class where I ask questions and I want to know you are like, you are following me. So I want a class where I can ask questions, receive answers, right or wrong answers. I don't believe there are wrong answers really. Like we are all like you are all here to learn. So I would appreciate an interactive class where we can exchange ideas, where I can hear your opinions and, guide you through this course. Also, I will appreciate decorum. By decorum, I mean muting your mics when you are not speaking and, trying not to disrupt the class. Please you can send in your questions or concerns through the chat box whenever when it is not time for you to talk yet. All right. And at any point in time, if you feel like you are not following or there is something you need to draw my attention to, please kindly use the reactions button or you can just raise your hand to let me know and call my attention to something so that we can all move together. Is that fine?
Yes, ma'am.
All right. Okay, so today's class is going to be mostly um, theoretical. Yeah, we are not going to be doing much calculations or any calculations at all. I'm just going to be introducing you to the course and guiding you through it so that by the time we start calculations, everything will seem familiar. Now, we're going to be doing two topics today. We'll be taking two topics today since they are both theoretical. First one is the introduction to cost accounting, and after we finish that, we will go straight to cost classification, estimation, segregation, and codification. All very beautiful topics, by the way. Don't be scared. Okay, so are you ready? Can we get started?
Yes, ma'am.
All right. Good morning, Kendi. Thank you for joining us. Now, okay, so cost accounting. Now, I'm very sure before now you would have been familiar with financial accounting, right? And I know that before now you understand that accounting goes beyond just financial accounting. There are a lot of branches. It goes beyond balancing books and balancing accounts. There are other aspects to accounting as well. So let me see. I want to take a Okay, so before now, have you ever wondered how people just set prices for their goods? Like, how do they just decide that this is what I want to price? I'm sure some of you have small businesses here. So, how do you just come to the conclusion that this is the price I want to set for my product? Or how do you, quote prices for contracts? Or how do you just, sometimes you might even sit down and say, I want to make budgets and stuff like that. In your everyday life, is what we call cost accounting. Yeah, so I want to know if you have any idea before now. I mean, the exam is in 3 months. I want to believe that some of you have started reading or you're started doing your research, or even if it's just something you picked up from somewhere. I want to know what you think or what idea you have about cost accounting. So let's hear it. Then I'm going to start with Abida. Good morning or good afternoon. Sorry, Abida. Are you with us?
Yes, ma'am. So, costs. You can say cost is the amount of expenditure incurred on a specific item or activity.
Cost account. Cost account.
Cost accounting, application of accounting and costing principles, the techniques, and ascertainment of costs.
Okay, you sound like someone that's been reading. I like that. Okay. Um, Kehinde, what about you? Let's hear from you. Good morning, Kehinde. It was good afternoon. Can you hear me? Okay. Um, maybe Kehinde is not fully with us. So let's move on. So thank you, Abida. You said it is the application. I love that the application of accounting. I mean, you didn't tell us what accounting is for. I'll take it. You said it is the application of accounting to costs, right? Let's leave it at that. So now, and then you were already explaining what cost is before then. You said cost is the amount you spend, right? The amount of expenditure incurred on certain goods and services as a business. So anyway, let's get right down to it. Let me explain what cost accounting is. I'm going to be sending my notes, so you can feel free to have jottings and or you can feel free to jot from this class, but I will send a comprehensive note after this so that everybody can use it. Now, so cost accounting represents the systematic process of recording, classifying, analyzing, summarizing, and allocating costs associated with the production of goods or delivery of services. Now, from that definition, I'm sure you'd have been hearing a lot of recording, classifying, analyzing. This is to say that cost accounting basically follows the principle of accounting, right? Like accounting on its own, we define accounting as the process of classifying, recording, analyzing, summarizing financial and non financial information. But then in financial accounting, we say it is just like, we are, the only thing we record there and analyze and classify are transactions, things that have already happened. We record financial transactions, we record past or historical information. And why do we do this? We do this so that we can pass information to users, those users of external accounting, financial accounting information. Basically, we are just showing people, okay, this is the position of the business. That's financial accounting. But when it comes to cost accounting, it goes deeper than that. Management, cost accounting is basically used by management. So the reason why what are we collecting? You collect both financial and non-financial information when it comes to cost accounting. You collect all data, all information that relates to how cost, like how we spend or what we spend on our products and services. So how do we arrive at those costs that we incur on all the goods and services in our day-to-day businesses? That's what cost accounting is for. So you collect all these data, you analyze them, you classify them, and it is used mainly by management. You don't need to tell the public doesn't need to know about cost accounting information. They don't need to know how you arrive at your price. This is mainly used by management, right? For planning purposes, for control purposes, to be able to like assess how efficient the workers are. That's what cost accounting is for. So, according to the Chartered Institute of Management Accountants, cost accounting is the application of accounting and costing principles, methods, and techniques. Thank you, Abida. This was the definition you gave us earlier. And techniques in ascertainment of cost and the analysis of savings and or excesses as compared with previous experiences or standards. So cost accounting goes beyond just reporting, right? You benchmark, you forecast, you're doing all this to make decisions. Okay, if I spent this amount last in the last year, how do I like budget, or how do I plan for costs in a way that I'll spend less this year? And why are we trying to spend less? While you're also trying to spend less, you also try to increase your revenue, right? Because at the end of the day, you're trying to get the highest profit. So cost accounting is mainly about planning. And to plan, you need both futuristic and historical information. So cost accounting deals with both history, future, it deals with financial, it deals with non-financial information, it deals with everything needed to decide or to plan or to budget for costs. And from everything I have been saying, I'm sure you may have questions or you may have some ideas, right? So now let's go with it this way. Now you'd have heard that I've been saying a lot of things, like a lot of ways that cost accounting is different from financial accounting. And I would love you, from what I have said or from all I have explained, I would love you to give me one or two differences you think we have between financial and cost accounting. How is cost accounting different from financial accounting? There are a lot of categories in which they differ, right? So I'd like to hear what you think. So let's start with Olashin Oluwakemi. Good afternoon. Can you hear me? Olashin, good afternoon. Okay, not with us. Can you guys still hear me? I want to know if you're still following me.
Yes, we can.
Okay, Rachel, good afternoon. Are you part of us? Are you with us? Okay. Um. All right. Abida, do you have any idea?
Well, you said
You said?
cost accounting involves collecting of
Okay.
financial and non-financial
Yes. Yes, that is one.
statements, the history, future, and like needed to plan for budgets for the cost.
Okay. Okay. Yes, that is one. Kende, you wanted to speak earlier. Let's hear you.
Yeah, I think from my own view, I see the difference between capital accounting and cost accounting. Cost accounting deals with the way recording, analyzing, controlling of costs of production or operative view. Then
Yes.
financial accounting, on the other hand, it's more summarizing, recording of all financial transactions.
Okay. So financial accounting deals with transactions, right? Historical transactions, while
Yes,
cost accounting deals with costs, basically.
yes,
Okay. Thank you very much for that. Thank you. So another one that I have been specifying since cost accounting is more future oriented. It deals with planning and forecasting, while financial accounting is historical in nature. It deals with past transactions. Then cost accounting may also be regular. It could be daily, it could be weekly, it could be monthly. Really, it can be at the discretion of management as management deems fit. But financial accounting is mostly periodic, usually annually, right?
yes.
Most financial statements are set to be released annually. Okay. Then okay, in cost accounting, approximation is acceptable. I mean, we are forecasting here. Sometimes you're dealing with data or things that have not yet happened. You're just trying to estimate. So approximation is permissible here. But in financial accounting, it requires precise and audited figures because you don't want to just estimate anything and give to the public or to give to users of financial statements. Then in cost accounting, cost accounting, it is used by internal users only. It is made use of by management only, while financial accounting is used by external stakeholders from the government to the public to shareholders. Everybody makes use of financial accounting information. I'm going to add one more. Cost accounting does not is not regulated by any specific standards. I mean, yes, there are some organizations that try to guide how the practice goes, but unlike financial accounting, where there are strict standards that should be followed in preparing accounts, it does not apply to cost accounting. Thank you. So, do you have any questions till now? Do you want to draw me back anywhere? For those that are just joining us, the class is being recorded, so you would be able to get everything I've said. But from what you've heard, is there anything you want to draw my attention to? Do you have any questions? Please let me know now. And can you guys hear me?
You
Yes,
can
we
hear
can.
you.
Okay.
Yes, you can. Please go on.
So I'll take it you have no questions. Then to move on. Now, what are the primary objectives of cost accounting? Right. So from the definitions I've been given earlier, like I'm sure you will be able to pick one or two objectives. So let me throw the question at you first. Each person will give me one. So why do we why do we practice cost accounting? Why does cost accounting exist? What is the purpose of cost accounting? I need one or two from each person. So Abida, let's start with you.
Ascertainment of costs and
Okay.
facilitating price, like to facilitate pricing.
Okay, yes, to make pricing decisions. All right. Thank you very much. Kehinde, what about you? Hi, Kehinde. Can you hear me?
I can hear you. I can hear you.
Okay, so I said you should give me one or two objectives of cost accounting that you know from the definitions or from the difference. What can you say is the purpose of cost accounting?
I feel like cost control,
Okay, yes, yes, very
cost
good.
control,
Thank you.
and
Okay,
probably profit planning.
yes, profit planning. Exactly. Thank you very much. Thank you. So Um, yeah, let me explain what you've mentioned first, then we'll go into others. So cost ascertainment, Abida said cost ascertainment. Yes, that is like one of the most important um, objectives of cost accounting, right? As I mentioned earlier, you'll be wondering how businesses or organizations just come together and say this is the price we want to give. So it is cost accounting that helps you to gather how much you use to make a product or how much you spend in offering a service before you decide, like you after ascertaining all those costs, that's when you'll be able to like make any further decision. So the first most important um the objective of cost accounting is to determine your costs, right? To ascertain the costs you incur. Then going further, after ascertaining your cost, now why do you want to ascertain your cost? You want to ascertain cost so that it can help you, determine the actual cost of production, which is going to help you establish the appropriate price to charge. Because businesses operate to make profits, and profits can only come when your costs are less than the price that you are receiving from your customers. So it is when you know the costs that you incur that you'll be able to set the appropriate or the right price, depending on the percentage of profit that you hope to make. Right. So yeah. Then Kehinde mentioned cost control, right? So cost control, yes, you want to be able to last year you incurred a lot of costs. So you might want to sit down and say, you know what, cost accounting helps you to sit down and decide which costs you like were actually controllable, which costs were just wastages, which costs were costs that would have been avoidable if you take notice of them or if you put more effort into it. So cost accounting helps you to control costs that each department is incurring. It helps you to trace costs. It helps you to trace wastages, right? So that you'll be able to make more profits and incur less costs. Then it is also used for decision making, right? So in cases where you want to decide whether to make a product or to buy it from external sources, whether you want to whether you want to decide whether a line should be continued or should be discontinued, or you want to know whether to accept or reject a specific order from a customer, right? Maybe a customer is coming with a special order and they're like, okay, I know this is your normal selling price, but will you sell it at this price for me because I want to use like this a contract I want to buy planes. So cost accounting will help you to sit down and make this decision because you'll be able to ascertain your costs and then charge the price, see whether that price that the customer is offering is okay or is going to be profitable to you. So these are few um these are few objectives of cost accounting. So the functions of cost accounting are similar to the objectives here. So you have the cost determination function, planning function, control, and decision making function. So these are like you would be able to read more on it in my notes. So I want us to move forward for that because we have other things to cover. But before we do that, do you have any questions for now? Please, you can just send chats or reactions to say you do not have any because or you understand me before we continue. Can we continue? All right. Thank you very much. Okay. Now let's talk about cost data and cost information. And from the name, you already know, I know you know that the difference between data and information is that information is processed data. Yeah. So cost data basically comprises unprocessed or factual records of expenditures incurred or anticipated by businesses. So it could be quotations or proposals from suppliers, or it could be purchase orders, invoices, payroll records that you have. These are data. It could also be timesheets or material requisition, or it could even be industry benchmarks. So basically, data that you gather for you to be able to make those decisions that cost accounting will help you make. Those are what we call cost data. Now, cost information represents analyzed, interpreted, and contextualized cost data that facilitates decision making and control. So yeah. So to transform cost data to cost information, you can group them, you have to group them, you have to classify them by either nature, function, behavior. We'll talk about this as we go further. You have to analyze them and you should interpret them and present them in structured formats to management to aid them with planning, forecasting, decision making. So basically cost data should process what is processed to make cost information. Do we understand that? Okay,
Please, can you
interactive.
come again?
Okay, okay. You said I should come again. All right.
Yes.
So, I said cost data is basically raw information, raw factual information on costs that are gathered, recorded, and classified, analyzed. You get basically data that is gathered and analyzed for you to process and get cost information, which will help you in that decision making. The major aim of cost accounting is to make decisions. Yeah, you want to make decisions, you want to plan, you want to forecast, but you cannot just make decisions based on those maybe quotation that a you cannot make decisions based on quotations that a supplier gives to you, or you know you cannot make decisions based on just invoices or timesheets. You need to process them. They need to be analyzed. You need to carry out certain act you need to carry out certain analysis on them. So that is what cause data are those raw facts that you first gather. Now after they have been processed, after you have analyzed them, whether depending on the techniques you choose to use, depending on the methods you choose to apply, after you have processed them, they become cost information, and that is what is useful to management to make decisions, to plan, to forecast, and to budget. Is that fine? Okay. Now, okay, before we proceed to share my screen so that you can see what I am using, right? And then I'll share the notes with you after this. Okay. Now, okay, give me a second. Sorry, I don't want to share my this thing is fucking. I can actually swear for our life. Okay, can you see my screen? see. Just come on, give me a second to test this. Can you see my screen? Can someone confirm if you can see my screen, please?
Yes, ma'am.
All right.
Yes, we can.
So, okay. Let me continue from here. Okay. So we talked about cost data and cost information. Now, let's talk about the roles and responsibilities of a cost accountant. I'm sure most times when you hear that somebody is an accountant, what immediately comes to your mind is that they are a financial accountant. They balance books or they prepare balance sheets, they prepare financial statements, right? So there are other types of accountants too. And one of them is a cost accountant. There is that accountant that is just there to help you sit down, gather costs, analyze them, and that's and decide or prepare reports that will help management make decisions. So let's talk about the roles and responsibilities of a cost accountant. Now, they said a cost accountant functions as a strategic partner in organizational management. He or she translates operational activities into financial implications and provides actionable insights. So what he or she does basically is gathers information. This cost data that we talked about, it gathers data, right? And then he is the one that goes like that does the performs the act of classifying this data or analyzing it and you know analyzing it and preparing reports while also preparing implementation plans for management that they will use to that they can use to budget, to plan and to forecast. So that is the role and responsibility of. So let's talk about their core responsibilities. Now, the first responsibility of a cost accountant is to is to design cost systems as well as implementation. So they have to develop appropriate costing methodologies, right? So for instance, now we're going to talk better on this later, but we have different cost methods. So you have job costing, you have batch costing, you have service costing, you have process costing. It is the cost accountant that determines which costing method or even costing technique is better for the organization, right? So the cost accountant establishes cost centers and allocation bases. We're going to talk more on this later. The cost accountant also designs how these methods and techniques will be implemented, right? And how best it is to report to management to help them make use of what he or she has analyzed. Now, a cost accountant also deals with cost analysis and reporting. He also deals with budgetary control, right? So, every company makes a budget at the beginning. Okay, this is how much we plan to sell, and this is how much we are going to spend in order to sell this. This is the profit we're going to make at the end. So, it is the cost accountant that deals with budgetary control that makes sure that every department is, at least following a budget is basically an estimate. It's futuristic. It doesn't necessarily mean that what you budgeted is what or what you planned to achieve is what you will achieve. But a cost accountant helps to make sure that each department is at least following the budget, at least trying to keep up with the costs that were planned for at the beginning, and if possible to reduce those costs. A cost accountant also deals with inventory management, right? Designs inventory control systems. It determines optimal inventory levels, right? So a cost accountant is the one that will decide when or that will design when it is best to order um, to order inventories, to place orders for inventories, depending on how, after studying how customers buy and after studying how long it takes for suppliers to deliver these goods. It's a cost accountant that will design when it is best to buy, that will decide the optimal level of inventory to keep at the time. Now, a cost accountant also helps with decision, as I have mentioned earlier, decision support, and a cost accountant helps with performance measurement. So each department head is given or is allowed to make a budget for each year, right? So it is a cost accountant that will help to measure how efficient each department is. How do they manage their costs? So just because we gave you this amount does not mean you're supposed to spend it totally, right? What did you do to make sure that you reduce costs? Did you try to negotiate with suppliers? What did you do? So it's a cost accountant that assists with all of this. After hearing this, does anybody want to be a cost accountant? So let me know that you are still following me. Please let me know if you are still with me and if you have any question or you want me to go back to anything. I will be sharing this note later after the class, but I just want to know you are following me. All right. Thank you very much. Okay. Now, just like every other accounting system, a cost accounting system has its advantages as well as its disadvantages, right? Now, of course, let's talk about the advantages. Now, a cost accounting system helps with profitability analysis. As I mentioned earlier, every business exists to make profit, right? So, cost accounting systems helps to analyze your profits. So, to analyze profits, you need to know which some organizations might have different product line. Let's take IoT for instance, ICAN Online Tutors for instance. So they have different services. They offer different. I want to take the different grades or different levels now as the different services. So they might decide that, oh, you know what, we don't usually get a lot of ATS1 students because maybe many ATS1 students want to read on their own, or we don't usually, why don't we not offer this service anymore? Or they can decide that because I don't know, based on what the students are paying, maybe we should not be giving them this particular service, or we should add this service to it to get more customers. These are things that basically they do everything to make sure that they make the optimal profits. It will all depend on how much are the students paying, how much are we paying our teachers, how much are we spending on software and every other thing, right? So they have to like analyze that profit, and it's cost accounting systems that helps with things like this. So that is one of the benefits. And it also helps to increase efficiency. As I mentioned earlier, it is through cost accounting systems that you'll be able to know which department is not performing well, which department is wasting resources, right? Which department does not even try to cut costs at all? Which department is not making as much profit as it should? Which department is usually idle and wastes organization resources. This is cost accounting systems that helps to improve efficiency through performance measurements, because there will be incentives for those departments that perform well and there might be consequences for those that don't. Now, cost accounting also helps with comparative analysis. Now, what's comparative analysis? Basically, you're comparing your organization either with the current versus the past. So you want to know how well you have done, whether you have grown as an organization, right? You want to know that it's cost accounting that can help you to check. So to know whether you have grown in terms of you know cost optimization, you might decide to check how much you used to spend in the past on certain, taking into consideration inflation and everything. So it's cost accounting that help you to compare how well you are doing, on efficiency terms and every other aspect. Cost accounting also helps with interdepartmental performance comparison, as I mentioned earlier. This through cost accounting that you'll be able to compare which department is doing well and which is not, right? It also helps you to benchmark against industry standards. So cost accounting, there is a reason why there are some companies that we call cost leaders. There are some companies that will call like they're the ones that will make the price, right? Right? They are called price. Yeah, they dictate the price that an industry will sell. For instance, let's take the cement industry in Nigeria, right? It is Dangote, for instance, that will dictate. That is one of the companies that will dictate the price, and every other small company will just try to keep up. It is because they have hacked how to minimize their costs. Well, they have economies of scale. They have all those advantages, right? So it is cost accounting that will help you to benchmark against the industry standards that has been set. Okay, this is the profit that this company made this year. What did they do different? What did they do? What are we not doing? It is cost accounting will help with that. It also helps with production control. So there are a lot of elements of production, right? You have material, you have labor, you have overheads. It's cost accounting that will help you to control all these different elements that are related to production. As I mentioned earlier, it will also help you with inventory management, right? So you want to make sure that you don't have you don't always have stock out, and customers will always be able to like meet their demands. You have to also make sure that you get from the best suppliers. You want to make sure that you have optimal level of inventory at every time. You don't overstock in a way that might lead to crisis when prices fall drastically, and you don't understock that you will not be able to meet up in times of scarcity. So it's cost accounting that will help you to do all of this. Now, limitations and challenges of cost accounting. Now, implementation costs. Cost accounting systems might be hard to design, right? So because there are a lot of softwares now that you might be able to use to be able to even train staff, right? Because you are saying, okay, you want department head to be efficient, you want them to do things, but you have to train them. You have to like show them how to do it. You have to continue training them. You have to continue help them to help them grow. So you need to implement all these things, and they require money. So that's one of the most like important or challenge of cost accounting systems. Another thing is system complexity. Now it is because we said training, right? Why do we even have to train them in the first place? It might be too hard, it might be too technical, because not everybody is an accountant. So it might be too complex for other employees to follow. Then there is also the issue of data quality. Now you make use of cost data. I said earlier that you make use of cost data to you make use of cost data to process cost data, and you make cost accounting information, right? So if the data is not accurate, if for instance you don't have accurate records of when employees come in and out, how do you analyze how efficient they are? Or you don't have accurate records of what you order or what you purchase from suppliers. If those records are not quality, those data like they're not quality enough, you might have issues in the information that you generate. Then there is also behavioral consideration, because yes, some employees might be resistant to change. They might misuse the information. They might be like you might even through this you might set unrealistic performance expectations, right? Because as I mentioned, not everybody is an accountant, right? So there might be too much pressure on them. And then yes, it is easy for large organizations to say, oh, we want to have a financial accountant separate from a cost accountant, separate from an internal auditor and everything. But in small organizations, it is not really practical, right? They have a harder time adapting. And then in the product industry or manufacturing industry, it is easier to analyze costs there, because okay, your 1 unit is your 1 unit, your 10 units is your 10 units. But in the service industry, what price do you pay and place on the experience of your employees, or what price do you understand? So all these things are limitations to cost accounting systems. Are we following? Do we understand this point? Okay, Abida, your hand was raised. Do you have a question? Okay, all right. Does anybody else have a question, or can we move forward? Okay, I'll take that as a yes to move forward. Now, designing an effective cost accounting system. Yes, so cost accounting systems don't just come on their own. You need to design them, and that's what a cost accountant is employed for, right? So let's talk about how to. Before you design your cost accounting system, you have to make sure that some things are in place, right? So you want to make sure you want to look at the organizational conditions. How committed is management to designing an effective cost accounting system? Because you as a cost accountant may go there and you might just be giving them all these ideas, but they might not even be interested. Do you understand? So you have to first understand how how much management and even other departments are ready to cooperate with you to make sure that you design an effective system. Then there is also procedural requirements. You also have procedural requirements. So you have to make sure that you have all the documentations in place. What are the mechanisms in place that are going to assist you to design this system, right? What is you have to design. how, yes, okay, so you need cost data. So how do you collect this cost data? All the, like, the documents, the mechanisms, everything in place. These are things that you need to have, and these are things you have to like understand how they operate before you can go ahead, so you want to design a cost accounting system. Now let's talk about the process of installing this cost accounting system. So phase one, you have the preliminary analysis, right? So here you specify all the requirements, you determine the objective. Why are you even designing this cost accounting system? So it depends on the organization, depends on the products they offer, depends on the service they render. So you need to know the objective, you need to know the scope, you need to know what is currently in place. Do they already have a cost accounting system? Is it something that was intertwined with financial accounting before, and you want to separate it? What is currently operating? Because there will always like be something operating in place, or is it that there was nothing at all? So you need to understand that first at the preliminary stage. Then you go ahead to design, right? So first you determine the method, the costing method. As I mentioned earlier, we're going to talk about this in detail later. But then you have different methods of costing, right? You have, depending on the industry you operate in, or depending on the type of product or service that you render, right? Depending on how you make these products, like that will help you to select the costing method that is appropriate or right for you. Then you also need to design your cost classification framework. So basically, cost classification occurs in different, there are different categories. It could be according to elements, could be according to behavior. We'll talk about this in detail later. It could be according to elements, could be according to behavior, could be according to function. So you need to design how do you intend to do that. Then there's also the reporting structure. So how often will you be reporting to management? How will you report to them? Is it going to be a virtual thing? Is there a software for it? Is it going to be manual? Is it going to be daily, weekly, monthly, quarterly? You have to design all of this. Now the next thing is the implementation preparation. So before you even implement, after you've designed, before you implement, you need to make sure that there are some things in place, right? So you want to make sure that everything is set, all documents are ready for you to implement. You have to make sure that yes, the staff have been properly trained before you can implement that system that you have designed. And then you can even go ahead and do a temporary test run to make sure that the design will work with the organization. Then you can go ahead and implement, right? You can do it in phases. So you can say, okay, first let us start with this aspect of it. You can have it in three different stages, right? Depending on your organization, you can have it in three different stages. You can roll out the first one this month. So depending on how well it is accepted in the organization, it could be that okay, the cost accounting system that you are designing is, let me make an example for instance now. So the cost accounting system you are designing is to help you see how efficient, or yeah, how efficient labor is. So what you want to track is the hours that yes, the hours that your employees put in and how much you pay them, right? You want to know when they come in, how much idle time they use. So if let's say you're using a manual system for instance now, so you want to make sure that each department is ready with, like, the documents that are going to be giving you. If there is a machine you use for employees clocking in and clocking out, you want to how often will you be receiving the reports for you to analyze this? Like all of that should be in place before you can now roll it out. So you can start with, first just checking who comes late and who comes early, who spends too much idle time during their work. Is this something that we can is this something that a machine can replace? Is this person really is it necessary for this person to be here? All those things should be in place. So you can roll out your design in phases, and then you can receive feedback both from the people that are implementing it for you and from your own judgment, right? You can gather feedback that will help you in the next stage, which is review and refinement. So it is not a rigid process, it is not a one-time thing. Just because you have designed a cost accounting system does not mean you just forget about. So it is something that you have to continually like develop and continue to improve. You have to keep on as the organization grows, because the intention of building a cost accounting system or designing a cost accounting system is for your organization to grow, right? So you have to check as the organization grows, does it have more needs? Like, are there specific needs that you need to meet up with? Are there like some things you need to add to that cost accounting system? Is this cost accounting system now stale? Is there a new software that you can use to replace the manual one you had in place before? All these things should regularly be checked and updated. So that is that. Now, some challenges. There are challenges you might meet along the way, such as organizational factors. The organization might be too small for that design that you made, or it could even be that like there are technical issues and it is too complex for the employees to understand, or there might not be enough staff or enough documents, or yes, there might not be an accurate system in place to accommodate that system that you have designed. And to avoid all these challenges, that's why we always have that first phase where you even assess it, the preliminary stage. So if you have done that, all this should not even really be a problem during the implementation stage. So that is that for designing an effective cost accounting system. Now, quickly, not to waste our time, let's okay. So this class for let's talk about the scope and applications of cost accounting. As for the classification, we're going to be talking about that in topic 2, so I will go straight to talking about costing methods and costing techniques. Now, costing methods. As I mentioned earlier, I said costing methods are basically um, yeah, they depend on how you like what are the characteristics of what your company is into. What industry, like, what are you, a service industry? Are you a product industry? How, what kind of costs, or what kind of what kind of costs do you incur, right? Like, what kind of service or what kind of product do you render? So let's take the first one, for instance, job or batch costing. Now, in this case, this costing method is suitable for industries or for organizations where each customer's item, or each good that you render to the customer is unique. It is custom. It could be, let's take a fashion designer for instance, right? So each dress is unique to what the customer wants. It is what the customer wants that you give to him. So there you this is where you do job cost. So in job costing, immediately a customer comes and places an order, what you do is you sit down, you decide how much you are going to incur on each of these, like on everything you need. So the material, the down to the zip, to everything that is specific to that item. Or it could be a carpenter, for instance. So you make furniture for people. So a family comes in, they decide that this is what they want. So in order for you to meet that job, that's why you use job costing. So in job costing, each it is unique, like each work or each process, each good is unique to the customer. And job costing is not really now it is usually joined with batch. So in some cases it could be in batches. So for instance, let's take that fashion designer as an example. Now imagine you receive you're supposed to produce uniforms, yes, for a school, right? So you do that in batches. Now that job, for instance, that job it is separate, it is unique, right, to that school, but you are producing more than one, so you'll be producing in batch. So in this case, you are accounting for more than one item, but it is still unique to a specific customer. Is that fine? Now, contract costing is somehow also similar to job and batch costing, but in this case, it is used for like larger settings or bigger settings, right? So a contract to build a road or to build a house, and things. So it usually takes it's just the time and the size of the operation that is different from job costing. It's still unique to each customer, but in this case, you need a longer amount of time. You need more resources to be able to carry out this and to account for this. So before I go to process and service costing, do I need to go back on something? Good afternoon. Are you still with me?
Yes, ma.
All right. Thank you very much. Thank you.
You're
Okay.
welcome.
So now let's talk about process and service costing. So process costing is usually used in organizations where you sell this, like it is in manufacturing organizations that it is mostly used, where you sell the same thing. So let's take for instance a biscuit manufacturing company. The biscuits you sell to every customer is the same. It is not unique to every customer. So they all follow a process. It is from packaging, like each product goes from mixing to baking to packaging to distribution. Like there is a specific process for it, right? For each of these things, and it is not unique to any customer. You just do the same thing, you produce it the same way. So you account there's a different way for accounting. In accounting for this type of industry, what you do is you usually like determine the cost of each of the process in the stage. So like each of the stages, sorry, in the process. So you determine the cost of mixing it and the cost of the ingredients and everything, mixing everything that you need, the cost of baking it, the cost of packaging it, the cost of branding it, the cost of distribution. So as those stages go in the process, that's what you account for in process costing. While for service costing, this one from the name service, it is used by service industries, right? So for instance, this tutorial center or yeah, so in service industries it is usually different for each industry, right? So it could be what a school uses is going to be different from what a hospital uses, right? It's going to be different from what see what other service center do we have, what a barbing salon uses, right? So different service industries have their own accounting methods, but basically service costing is used by service industries to determine the costs that they incur when they want to deliver that service that they do. So that's costing methods. And costing techniques, on the other hand, basically, they are how you choose to analyze your costs. How you choose to analyze costs. So, um, absorption costing. In absorption costing, you you don't divide them into fixed or variable costs. Here, the absorption costing is also called full costing. Here, you just account for them together, right? Just account for both fixed and variable costs together. You determine your profits, you determine your full profits. Because under absorption costing, we believe that every cost is important. But in marginal or variable costing, here you deal with mostly direct costs or variable costs, right? You separate your fixed cost from a variable cost, then you bring out all the ones that you feel like are relevant to what you are doing, like they are relevant to that job or they are relevant to that process. You bring them out, then you account for those ones. So in marginal costing, you separate fixed and variable costs before making decisions. But in absorption costing or full costing, you analyze them together. Under standard costing, another technique here, you have predetermined standards at the beginning of you have predetermined standards at the beginning of the production process or the service rendering process. You have a particular standard. Okay, this is how much I want to make as profit. In order to do that, this is the standard cost that we're going to incur. This is not like you have your standards, right? So at the end, you now you benchmark that against what you actually spent, what you actually incurred. And this is what it's going we call that variance analysis. So here you are going to be able to get the differences between what you planned to spend and what you actually spent, right? So you know how efficient you are, and then you go further to analyze what caused those differences so that you'll be able to know what to do next. And then activity based costing. Under activity-based costing system, we believe that each activity you need to separate the activity that is relevant to each product. For instance, there are some products that you look at the cost, like the cost that you're analyzing for them might not even be cost that they are incurring. Take for instance, let's use that biscuit manufacturing company for instance. So yes, you have to mix it, you have to package it, you have to brand it. But then what if you have two separate lines, right? And then there is one of them that is not necessarily going through one of those processes, but then you add it to. So in activity based costing, it is only activities that yes, you look at there are something called drivers, right? So you look at things that drive cost for that product. You look at activities that are directly related to that product when you are making your decisions, when you are deciding that okay, this is the cost relevant to the product. As we go further, we'll talk more on this later in the course, but these are just summaries of the difference between costing methods and costing techniques. Please notice it is very important for you to even note the difference between costing methods and costing techniques, because you'll be seeing a lot of questions like which of this is not a costing method, and then you have like they'll mention all the costing methods and then they'll put one costing technique. Do you understand? So you need to know the difference between techniques and methods. Okay, can we move on? Are you still with me? Can we move on, please?
Yes, we can.
All right.
We can
Thank
move
you.
on.
Thank you. Okay. Let me see. Okay. Yes, can say we have come to the end of this topic. I will send my notes to the class and you can read further on it and ask questions where you have. So in essence, I have introduced cost accounting to us. Now I want us to move to our second topic, which is on cost classification, estimation, segregation, and um, and codification. Right. So I'm going to be ending. Stop. I will stop sharing for now. Second, we can move to the second topic. Good afternoon. Can you still see my screen? Or should I share it again?
Yes, ma. Share it again.
Okay. Okay. I'm sharing it now. Can you see it? Okay. Please let me know if you can see it. Can someone please answer if you can see my screen?
Yes, yes, yes. I can. I can
All
see
right.
it.
Okay. So now let's go to the second topic, cost classification, segregation, and codification. Now, why do we even need to classify costs? I talked about cost classification earlier as one of the methods or one of the should I say one of the processes involved in the cost accounting system, right? So why do we divide, like why do you think we need to classify costs? It is to help us, yes, it is to help us make meaningful analysis and interpretations, right? So you want to be able to, like, let's take for instance, when you classify according to elements, you cannot really account for materials the same way you account for labor, right? Because you cannot really put a price on human experience or human efficiency the same way you do different units of materials, right? So that's one of the imperatives behind um cost classification. So you need to classify costs because not every item or not every element can be accounted for the same way, right? It supports accurate product costing and pricing. So there are some products that, for instance, they might not even necessarily need some. If we take classification according to behavior, for instance, now according to direct and fixed costs, right? There are some products that fixed cost is fixed, whether you produce 1 million or you produce 50, you are still going to incur the same thing on fixed costs. However, variable costs depend on number of products that you produce, right? So one of the reasons why you have to classify cost is to be able to, like, identify which cost is actually relevant to the decision that you're about to take. Right? It enhances decision making. It provides structured framework for performance evaluation. Now, okay, let's talk about the classification categories. And there are a lot of categories by which we classify costs, right? And the first one is according to element of cost. Now, when you classify according to elements of cost, it means you are classifying by what are the things that go into a product, what are the things that make up a product. Now, each product, when you look at a product, either it's a product or a service, when you look at different products, there are things that come together to make it, right? Now, in most cases, when you take a physical product, it took materials to be joined together. Please let me know at any point if you cannot hear me. It took joining materials together. It took the use of human efforts to put them together. Maybe you even made use of machines, right? You also incurred some other expenses that might not really show when you look at the product. So all these things come together. They are called the elements of cost, right? So the elements of costs are classified into three. You have material, you have labor, and other expenses. Those other expenses, they are the ones that you cannot really classify as material or labor. We'll talk about them when we get there. So let's start with material costs. And material costs are expenditures on physical substances. Physical substances, please, emphasis on physical. They are things you can see, you can touch, consumed in the production or service delivery, excluding fixed assets. Now I'm going to be using this fashion designer example a lot. So a fashion designer, for instance, now you want to make a dress, right? Now the material you use, the fabric, yeah, you use to make the dress, the zip, the thread, everything, all those ones, they are called, like, those are what's from material, excluding fixed assets. The reason why this was put there was because it's not that you like that this and what I call it, the machine you use to make the dress is also physical, right? So you can say it is a physical substance and it was used when you were making the product, but it is a fixed asset. I'm not going to define fixed assets. I'm sure you know fixed assets from your financial accountant, but just to be sure we are on the same page, fixed assets are they are they are fixed assets are they're items, yes, they are items that an organization purchases and to be used for more than one accounting period, right? Which are to bring future economic benefits to an organization. So in this fashion designer example now, your fixed asset is not like you're not giving it to the customer to take with their dress. You bought it for it to help you, for it to serve you for more than one accounting period, right? So it is not included. So when you're talking about material cost, you don't include fixed assets, right? Now, there are many categories of materials. One, you have raw materials. These are the basic inputs that you transformed into finished products, right? We have examples here. You have flour for baking, you have crude oil for refining into fuel, into diesel. You also have timber to make furniture, right? Then you also have components parts. Now they are also they might also be this, but they are not like the basic inputs, right? They are just things that you add to make up a whole product. So in this our scenario as fashion designers, your fabric is what will stand as your raw material, right? It is the basic input. It is that fabric you transformed into a dress. However, you needed some components to make it whole. So that's where the zip, the thread, the needle, sorry, not the needle, the buttons, yes. So that's where all those ones come in, right? Those are component parts. They are complicated elements incorporated into the product. So they are just there to hold the product together to make it a whole. Then you have work in progress. Another category of materials is work in progress. So these ones are partially completed. You need to refine raw materials to make them finished goods. Work in progress are those raw materials that they are not yet there, they are not yet finished goods, but some work has been done on them. You cannot classify them as raw materials anymore. Then you have primary packing materials. So for instance, you in this scenario here, as a fashion designer, you after you make dresses, maybe you usually package them in a nylon to give to your customers, right? That nylon is your that nylon is a primary packaging material. It is also part of your material, right? It is not, yes, it does not form part of the product or anything, but you need it to be able to deliver to your customers. And then you have consumable stores. Now these are things that you consume while using. So we have examples here. You have cleaning solvents, lubricating oils. So maybe those oils that you use to lubricate your machine while you make the dresses, or what you use to clean your shop or anything. Those are consumable stores. They also form part of materials, right? Now, okay, this last one says indirect materials, but I'd like to point out that materials could either be direct or indirect. We're going to talk about that. That's another classification entirely, classification according to traceability. When we get there, we'll talk about that. But before I go into labor as an element of cost, can someone just confirm if you can still hear me? All
I can
right.
still hear you.
Okay. So I want this class to be a little bit interactive. So let me see. Before we go into labor as an element of cost, can someone just attempt it? I need someone to try, someone to explain what you think labor is as an element of cost. Right. I'm sure you'd have heard this before. So let us start with Oluyemi Taiwo. Hi, can you hear me? Good afternoon, Oluyemi Taiwo. Okay, I'll take it. He or she is not here with us completely. Oluwakemi, good afternoon. Can you hear me? Oluwakemi, good afternoon. Hey, can anyone hear me? Is this a general problem?
Hello, I can hear you.
Can hear
Okay.
you.
All right. Okay, so okay, Kehinde, then give us your idea on labor cost. So we've talked about material, right? We said it is the physical material, physical item that you are converting into finished goods. So what then is labor as an element of cost? How does labor come into the cost that you incur when you're making a product?
I think, like as the name implies, labor means human effort.
Okay. Yes. Okay.
So I think effort put in place in cost of production.
Okay. Okay. Yes, human effort. So now labor, unlike material, it is not physical. You
Put
cannot
designer,
say, can you hear me?
you're going on.
Yes.
Okay. So labor, unlike material, is not physical. I mean, yes, you can see the people, but you cannot necessarily see, like, you cannot weigh the efforts that they are putting into it. It's until you see the finished product that you say, oh, okay, wow, this person did. But even then, what you are looking at is the placement of each of those materials, right? Each of those items. You cannot necessarily, like, should I say, see. I don't know if you understand me. It is not something that is physical, right? That's labor. So labor costs are basically costs that you incur when you are trying to compensate humans for the efforts they apply into products or services. Now, our categories here, as I mentioned earlier, we're going to be dividing, like we'll talk about direct and indirect costs later when we are talking about classification of costs according to traceability, right? But for now, we have different um, categories of labor. So it would either be wages that you give to those employees that come there on a routine, um, or those ones that work in the factory, those ones that are directly involved in it. Or it could also be salary or admin costs. So there are a lot of labor expenses which we'll talk about when we talk about classification according to traceability. But the most important thing to know is that labor costs are costs incurred when when you want to compensate humans for the effort they put into converting raw materials to finished goods. Now, all other expenses or all other costs, yeah, sorry, all other costs other than material and labor are, we just classify them as other expenses, right? Now, a good example, for instance, now you have things like royalty payments, or maybe you hire a specialized equipment for your goods, right? Or you pay things like rent, things like insurance, all those other things that come together to fully make your finished products, right? That cannot necessarily be classified as human effort or classified as a material cost. They fall under this category of expenses. So, classification according to elements, the first and most important classification is divided into three: material, labor, and other expenses. Are we clear on that? Now, going further, let's talk about classification by nature or traceability. Now, when you classify costs according to traceability, you are talking about direct or indirect costs. So let's start with direct costs. Direct costs are costs that you can specifically trace or identify with a particular product or a cost unit. So take for instance that dress that we made now. When you look at the dress, whatever comes to your mind first, right? The first things when somebody asks you what are the costs that you spent or what are the costs you think were incurred in making this product, and like those things come to mind because you can see them, like you can clearly see that this was spent or this was incurred when making this product. They are direct costs. So for instance, what I call it, the materials. So their direct costs are divided into three. You have direct materials, direct labor, and direct expense. So basically, direct costs are divided into the three elements of costs, right? So materials, labor, expenses. So for direct materials, you can like materials that can be directly traced into that product. So for instance, for a dress now, the only direct materials there will be the fabric that you use to make it, then any other materials that can be clearly seen on it, right? As well as the maybe the buttons, if they are obvious, right? The buttons or the zip, those are the only direct materials that that you can trace, that anybody that sees it will be able to say yes, this was used. Then you have direct labor. Now, the only direct labor you think about when let's take I'm still using our fashion designing as an example, right? So the only direct labor you think of is the fashion designer that made it, the person that sat down in front of the machine and designed everything, the person that was cutting the fabrics and trying to put everything in place. That's the only person you think about. You don't think about whether they had an assistant. You don't think about whether anybody was there feeding them while they were doing it. You don't think about whether there was somebody supervising them, right? You only think about the person that sat down and designed the dress. So that is direct labor for you. So it is only like the human efforts that can be directly traced to an item or a product. And when you see that product, you know that okay, yes, this effort was put into it. That is direct labor. And then direct expenses are all other expenses that you are sure that were incurred in the process of making this. And so, for instance, now I mentioned hire of special equipment when I was talking about expenses, right? So it could be a direct expense because, for instance, if you make a dress, right, and maybe you needed to whip a side or you needed to use a special kind of machine, and you know that this cannot be done without that machine. If it was hired, right, maybe the shop does not have that. If it was hired, you know that, okay, yes, that is a direct expense because you definitely needed it to make that dress. Do you understand? Now, the addition of direct materials, direct labor, and direct expenses make up what we call prime costs. Right? They are called prime costs when you add them together. So, prime costs are direct expenses. They are the addition of direct materials, direct labor, and other direct expenses. Are we fine? Is that clear? Okay, is anybody there? Do we understand?
Yes.
All right. Thank you. Okay, so do you want to do you want to attempt, let's start with indirect material. So what do you think indirect materials are? Let's stay with our example that we have been using, right? The fashion designing. And so what are indirect materials and what are examples of indirect materials you think someone that is a fashion designer might incur when making a dress? Hi Abida, can you hear me?
Yes. Hello?
Yeah, yeah. So I said what are examples of indirect materials?
I think the examples of indirect materials when making a dresses is the lining because it's not visible. People are not seeing it. So and the the thread. Hello, ma.
Yes, yes, you're very correct.
Beeswax, chalks.
So the thread, yes, the lining, yes, those are things that people cannot immediately see. They only know that the cloth is not transparent. They don't know that something is there that is holding, or they don't even know whether something was put there to make sure that it is not, it's not uncomfortable for the person wearing it. So yes, and then the thread, like nobody really sees the thread there. Now, okay, thank you very much for that. Oluwakemi. Now, Abida, do you want to attempt or do you want to take indirect labor? Indirect labor.
Like um the person that is cutting the clothes. The person
Okay.
cutting the clothes. Or the
Well,
person sewing it.
the person cutting and sewing might be the same person. And when you look at a dress, you know that somebody cut it and somebody sewed it. But then you don't know whether somebody, let's talk about the supervisor. Maybe there is a supervisor there, right? Or maybe there is a cleaner, someone that cleans the shop that you use, right?
Mm,
Or there is someone that goes to the market to buy things. Nobody
mm,
talks about or thinks about all those people. Do you understand?
yes.
Yes. So thank you. Thank you very much for that attempt.
Ma, I cannot hear you again, no.
I have been muted since. Sorry, I'm so sorry about that. So where did you stop hearing me? Sorry.
Just after the question.
Okay. So yeah, okay. One more thing. So let me mention the fact that I said when you add direct materials, direct labor, and direct expenses, you have indirect sorry, you have prime costs, right? So when you add indirect costs together, indirect materials, indirect labor, and indirect expenses, you have overheads. Is that clear? Now, moving on to classification according to function of costs. Most of these are indirect. So this is basically classifying it based on the should I say the department that incurs them, right? So you have the production or manufacturing costs, right? So these are the ones that you incur when you're trying to make the products, the ones that actually you incur actually in the factory, right? And then moving forward, you have admin costs. These ones are outside the factory. They are the ones that those the people at the back, at the admin guys, the big the yes, the top management incur. So the salary you pay, the office rent, the legal fees, the audit fees, accounting fees, communication expenses, in fact, depreciation costs, the insurance, yes, insurance, general training for your staff. These are administrative costs, right? And then you can also classify costs as selling and distribution costs. So after manufacturing it, after it is like ready at the site or at the company, you have to transport them or you have to find a way to make sure that they reach the final consumers, either through distribution channels or directly by yourself. So that's where distribution and selling overheads or costs come in. So in this case, you are thinking about the advertisement cost. How do you promote it? If you're doing buy one get one free, or you're paying celebrities or influencers to advertise your products for you, all these are related to selling and distribution expenses. Now, furthermore, you have research and development costs. Now, you want to make sure that you keep on staying with market trends. You want to make sure that you keep on satisfying your consumers and making sure that they have what they need. So you have to keep on doing research. You have to keep on like developing your products, and that's where research and development costs come in, right? So you have people probably in the lab, or you have those that just do research like online and everything. If you pay for it, it is part of your research cost. And then if you decide to test the products after you have researched on it, it is still part of research and development. We also have finance costs finally. So these are bank things like bank charges. Basically, finance costs are costs that you use to get money that you are using to finance the business. So are you borrowing loans? Are you, selling shares? Things like that. All these things are related to finance costs. So that's another classification of costs. Are we clear? Sorry, can you still hear me? Sorry for earlier. I'm so sorry about earlier. Can you hear me?
Are you saying like the
All
finance
right.
cost is under function of cost?
Yes, it is also classification according to function.
Okay.
Yes. Okay. Now moving on, we have behavioral classification of course. So now we've talked about three. We have classified according to elements, we've classified according to traceability, we have classified according to functions. Now let's talk about classification according to behavior. Now, so cost behavior basically examines how costs respond to changes in activity levels or behavior. So it examines how costs respond to changes in activity levels or behavior. So
Hello, ma, we cannot hear you again, no. Ma, I can't hear you again. No, your this thing is mute.
I think our network is not good.
Hello, ma.
She's not here again. I think our network has gone off.
Mm-hmm.
Good afternoon. Can you still hear me?
Good afternoon. We're not hearing you before
Okay,
at
so
all.
sorry about that. I have a network issue.
Okay.
I am back. Okay. So where did you stop hearing me, please?
According to behavior,
Okay. Okay. Give me a second to share my screen again. And you
okay.
just
Hello.
okay. Can you see my screen now?
Yes, ma'am.
So we're on according to behavior. Great. So I said it can be divided into fixed. Majorly, it can be divided into fixed, variable, and mixed costs, right? And I said mixed costs can also be referred to as semi-variable or semi-fixed. Now let's talk about fixed costs first. Now, fixed costs are costs that remain constant in total within a relevant range, despite changes in activity levels. Now, the key thing to note here is that it remains constant in total, right? So let me use an example to explain this further. Take for instance our fashion designing shop, right? You rent the place. Let's say you rent a one-bedroom apartment for this, right? Or a one room for this. So if whether you're producing 10 dresses or you're producing one dress, that rent remains the same. You're still paying the same rent for it. Do you understand? So in total now, but the thing is when you now decide that okay, if I'm producing 10 dresses, I'm paying 100K as rent, right? That's a fixed cost in total. If I decide to increase it to 20, for those 20 dresses, I am still paying 100K. But when you look at them per unit, so if you're producing 10 dresses, I want somebody to answer this for me now. If I'm producing 10 dresses and I am paying 100K in rent, how much am I paying in rent on one dress? On one dress.
Ma, can you come again?
Okay. So if you produce 10 dresses and you pay 100,000 naira as rent, how much are you paying as rent on one dress? So for 10 dresses, you're paying 100K. So for one dress, how much are you paying?
10,000.
10,000 naira.
Okay. So what if you now increase your number of dresses to 20?
20,
5,000.
5,000
5,000.
exactly. So you see that in total, the rent they are paying remained the same. It was still 100,000. But when you decide to look at it per unit, that okay, for each dress, how much am I paying? You see that it is different, right? It varied. So that's why in the definition it is specified that fixed costs remain constant in total within a relevant range despite changes in activity. So it is activity level you are looking at here. So if I produce 10 dresses, if I produce 100 dresses, I'm still paying the same 100K. But if I decide to look at them per unit, they will vary. Do you understand? So that's why that in total is very important when you are defining or when you are giving your definition of fixed costs. Do you understand?
Yes, ma'am.
All right. So yeah, there are characteristics of fixed costs. It is time dependent rather than activity dependent. So here, okay, yes, it's not that that rent cannot change. The following year, your landlord might decide to collect 100K, I mean 120K. So
Hello,
it
ma.
is not, yeah, can you hear me?
I can't hear you. Oh.
Really? Hello?
Yes.
Okay, can anybody else hear me?
I can hear you.
I
Okay.
can hear you.
Oluwakem, can you check your network? Others can hear me. I don't know.
Okay.
Can somebody tell her on the group chat? Maybe it is her network. Okay. Now, as I was saying, so fixed costs they might actually change, but they are it depends on the time. It depends on the period. So your landlord might come and decide that, oh, your rent is going to be this the following year. It means it has changed, but it is not like it's not something that changes with the activity level. Do you understand? It is fixed because no matter the activity level you're operating at within a given range, it is going to be the same thing. Hold on a second. Okay. All right. Sorry about that. I was having some network troubles. Okay. So as I was explaining, fixed cost is constant in aggregate amounts. So that's what I was trying to explain with that example the other time. So when you look at the 10 dresses, 20 dresses, 30 dresses, you are still paying the same amount as rent, right? But when you now break them down, going to the third characteristic, when you break them down, looking at them per unit, it will be variable. Do you understand? And they are often described as period costs because you pay them per period. There are things that you incur and they are charged against profit or loss and not manufacturing costs. Do you understand? Can you guys still hear me?
Yes, ma'am.
Yes.
So some of the examples are taxes, yes, then factory rents, salaries of permanent staff. Yes, there are things that and things another thing you should know about fixed costs is that whether you produce or you don't produce, you will incur them. So you've already rented the place. Whether you produce or you don't produce, whether you sell or not, you are going to pay them. Right. So it's just something as salaries of permanent staff or those executives. So they are going to collect their salaries at the end of the period no matter what. It's not like those workers that are like incentive that their own payment is based on the number that they produced or based on incentives, right? So that's how fixed costs operate. Now we have different classifications of fixed costs, and that's why I said when I was talking about the classifications or costs according to behavior, I said majorly we have three, but then they can also be broken down. So you have committed fixed costs. These are costs that, yes, as I said, you have already like made commitments to them. You cannot avoid them. So in the next 3, 4, 5 years, there are things you'll be paying. So, for instance, if you decide that you don't want to rent, you want to take a lease instead, you have already entered into that agreement. So, in the next 4, 5 years, even if, like, for instance, take for instance, when COVID happened or anything, that employees were not really using the workspace or anything, you still have to pay that lease because you have committed to it. Then you have discretionary fixed costs. These ones are costs that they don't necessarily happen every year, but like it is management that will determine them. But when you actually do incur them, they don't change your level of activities. So take for instance training programs or research. It's not every time you'd say that I just want to train everybody. I mean, you train them like almost every time, yes, but it's not every time you just say, oh, they need training, they need training. So when you actually decide to train them after you've paid for it, whether they now after you train, whether they produce 10 or they produce 50, you have incurred that cost, right? So it is going to be fixed. Another one is stepped fixed cost. This is like one that I want you to really pay attention to. Now, I've been saying, okay, you rent one room, you use it to make dresses, right? You produce 10, you produce 20, you produce 30, you are still paying the same rent. But what now happens when you have to produce 1,000 and you have to fit in like 5 machines? They might not be able to, that one room might not be able to take it anymore, right? So here you have to now move, you have to take an extra rent, like you have to take one more rent, like one more room, do you understand? Or even take those machines, for instance, you use one machine to produce 10, use one machine to produce 20, but if you now receive an order that you need to produce 500, what will you do? You need to buy more machines. So in this case, you're incurring more fixed costs. Do you understand? So it can fixed cost. This is to say that fixed cost, yes, it remains the same at a given at different activity levels, but within a specific range. If, for instance, this class was physical and I rent a class that can take 50 students, by the time you become 60, I would have to maybe rent another class and divide it 30-30. Do you understand? So there are costs that would have to change, like at a given range or at a given distance, you have to move, you have to take a step further. That's that's what step fixed cost is. Do you understand?
Yes, ma'am.
All right.
Yes, ma'am.
Thank you very much. Okay, so now let's move to variable costs. Now, variable costs are costs that vary in proportion. They are basically the opposite of fixed costs. So we are saying in total now, fixed costs will remain the same. But for variable costs, it is according to level of activity. So variable costs are those, they're basically like um you calculate them per unit of what you make. So take those dresses for instance, maybe the fabrics, when you add the cost of the fabrics, the zip, the lining, everything, it gives you like 5k, right? If you produce two dresses, you spend 10k. If you produce three dresses, you spend 15k. Do you understand? So that like per unit, that 5k is not changing. They're going to remain 5k, 5k, 5k. But if you produce 20 dresses, the amount you spend will be different from if you produce 10 dresses. Do you understand? Are you with me?
Yes, ma'am.
All right. Thank you. I just want to be sure that I am audible so that like when you want to come back to the recorded classes, you can hear what I was saying. Now let's talk about the characteristics of variable costs. So yeah, they are constant per unit of activity, as I have explained. So each of them would remain that amount that used to produce one. But when you now like combine the amounts that you're producing based on the activity levels, they will change. So if for instance you buy and you sell pens and you buy each one 50 naira, you sell them 100 naira, right? If you're buying it 50 naira per one, that 50 naira is constant for each one, it will remain 50 naira. But when you sell 10, the amount you make will be different from, or when you buy 10, sorry, the amount you spend will be different from when you buy 20 or when you buy 30. Do you understand? So that's how variable cost. And in most cases, now there are times when variable costs, because there are variable costs that are not directly traceable to an item, but in most cases, variable costs are costs that are direct. Now, so all yeah, almost all variable costs are direct costs. Actually, like when you look at the product and you say, oh, okay, this is directly traceable. Like sometimes, in most cases, there are some variable costs that might not necessarily be traceable, but in most cases, variable costs are directly traceable to an item, and they are often described as product costs. That means they are often related to cost of production, right? That's what, so product cost as opposed to period costs, which I explained when we were talking about fixed costs. Some examples of variable costs are commission, sales commission, production supply, royalty payments. Now, the reason why I said there are times when variable cost might not be direct. Take sales commission, for instance. Now, if you tell this and the people that sell, your sales reps, that okay, if you sell 20, you have you'll be giving a percent, this as a percentage as your payment, or things like that. You cannot, like, those, that commission that you're paying to that sales rep is not, like, it is not obvious when you as a customer buy the product. You cannot say this, they spent sales commission on it. Do you understand? But it is a variable cost. It varies with the number of dresses that were sold. Do you understand? So that's why I said sometimes variable cost might not necessarily be direct, but in most cases variable costs are costs that you can directly trace to a product. Okay. um all right, now let's talk about mixed costs, or semi-variable or semi-fixed. These are, from the name mixed, it is, they are either they contain both fixed and variable costs. And I feel like, I think most products are actually like this. They have like they have an element of both fixed and variable costs in them. That's how almost all products are. So that's what mixed costs are. Now, to deal with mixed costs, you need to be able to separate them, and we're going to talk about that shortly. You need to be able to separate them into fixed and variable costs before you can make decisions based on them. Examples of mixed costs are electricity bills, for instance. Like, okay, there are times that your electricity bills might come in a way that no matter the amount of units you use, you always have to pay. Like, there is a fixed charge. The fact that you're even just buying electricity, you have to pay a fixed charge. That's the fixed aspect of it. But then after that fixed charge, say for instance it is 5,000, after that fixed charge, they'll now tell you that per unit is like 100 naira. Do you understand? So you can now control from that 5,000 upward. But you know that no matter what, you are incurring that 5,000 on utility. Same as telephone expenses, same as vehicle operating cost. Take for instance your vehicle operating cost now. Okay, you are incurring insurance on it. That is something that is fixed. That's something you have to incur. That's something you have to pay for, whether you use the car or not, right? But then when you now decide to use it, the amount of times you use it or the way you use it will determine how much fuel you have to purchase. So the fuel there is variable, right? But the insurance that you're paying on it to keep it, to make sure that it is protected from risks, that one is fixed. So there are costs that contain both fixed and variable elements. And to be able to make decisions on them, you have to separate the fixed from the variable so that you make your decision based on that variable one that you can control. Do you understand?
No, ma'am.
Yes, ma'am.
Okay. Someone said no. Okay. Where don't you understand? Is it the mixed cost part? Where
Yes,
do you want me to take again?
the mixed costs,
Okay.
semi-variable mixed costs.
Okay. So I said there are some costs. Okay, have you ever used I'm sure you'd have ordered this car rides before, Uber, right? Have you ordered it before?
Yes,
Okay. So there was one time I was like doing a research on it. I wanted to know how much they charge, whether it was per hour or based on distance. I can't remember which one exactly it was, but one thing I found out was that there was like a beginning price for it. Like there is an amount you cannot pay less than. Do you understand? Like there is always a
yes,
charge at the beginning. So that was fixed. So if you now decide that okay, you want to travel for 10 hours or you want to travel for 2 hours, no matter how long you are using, that beginning charge will always be there. That one was fixed. But then the number of hours will now determine how much you will now pay in addition to that fixed charge. So if for instance, let's take for instance that fixed charge is 2,000 naira and they charge 500 naira per hour. So if I decide to go 4 hours, I'm going to pay 500 naira times 4 hours, right? That's 2,000 naira plus that initial charge that was there. So my cost of transport, so if I now come out and I tell somebody that my cost of transport is 4,000 naira, the person, okay, and I tell you that it contains both fixed and variable costs. You know that the fixed part of it is the 2,000 naira that was beginning, and then that remaining 2,000 that I spent on it was now the variable. That one was variable based on the number of hours that I spent. Do you understand the example?
Yes, ma'am. Thank you.
All right. You're welcome. So that's how fixed cost operates basically. So like you when someone asks, and in most cases when we get there we'll get there shortly, we are going to talk about it today, separating and mixed costs into fixed and variable so that you can make your decisions. Now factors affecting cost behavior. So you have volume related factors, right? um Okay, so basically, factors affect. So, what are the factors that will determine whether it is a fixed cost, whether it is a variable cost, or a mixed cost? It could be the output levels. It could be the machine hours that you use. That's how you like you. That's how you are. You be able to. Basically, these are like the. Should I say? Because we've been talking about activity levels. Activity levels. So, what are activity levels? Activity levels may be the number of units you produce. Could be the number of units you sell, could be the machine hours, could be the labor hours. That's what we call activity levels, right? Okay. I'm trying to breeze through it because we have other costs to talk about. Now, classification by relevance for decision making. Now we've talked about 4 classifications. We said you can classify according to element of cost. Can you people tell me the remaining 3? Talk about element of cost. And what are the other 3 that we've talked about?
Nature,
Yes.
behavior,
Yes.
and look,
And function. According to function. Yes. Thank you very much for that. So now let's move to the 5th one, classification by relevance for decision making. Now, cost can either be relevant or irrelevant. I know you're thinking, which cost is not important, right? Okay. Now, it is not as if it is not relevant per se, but it is not relevant for decision making. Why? Because whether you spend it or not, you still like it doesn't really affect your decision. So let's talk. Relevant costs are costs that if you incur them or you don't incur them, like whatever you decide to do with them will affect your outcome in a way. That's relevant cost. So relevant cost, they affect your outcome. They have listen, they are usually future oriented. So if I decide, oh, should I spend this money, like this is, as a student for instance, you can say, if I spend this money or if I buy this handout, will I be able to attend that party? Like it will affect a decision, so it is a relevant cost. Do you understand? Then you can also be, they are usually difference between alternatives, as I just mentioned right now. So yes, it is relevant because you've not made that choice. It is still in the future, right? You are trying to take which alternative is better. It's irrelevant because if you take whichever decision you make would affect the outcome of the other, right? If you decide to use the money to eat, you will not have book to read. If you decide to use the money to buy book, you'll be hungry. So like that's relevant cost. Relevant costs are costs that um when whether you choose to incur them or you choose to not incur them, they will affect your decision outcome, right? Now they are avoidable through costs. It is a thing that you can, they are usually costs that you can decide not to spend. They are usually costs that you can decide not to incur. Those are relevant costs. You still have a little bit of power over them. Do you get? Now, there are some types of relevant costs that you should know. First one is incremental costs. So, if for instance, you usually produce at a certain range, say you usually produce 20 dresses, but then during Christmas or maybe for a school, a customer comes and is like, I want a special order and I want to order 50 dresses. If for instance you use one machine normally, you would have to rent other machines that is going to assist you. You'd have to maybe pay your employees overtime for them to work on those dresses. You have to incur some additional costs separate. I mean, you might not necessarily need to pay extra rent, do you understand? But there are some costs that are just relevant that you need to consider in your decision making. So when the customer comes, you're not going to be thinking about those ones that you have already incurred them, that whether you take the order or not, they won't affect it. You're going to be thinking about those things. If I should take this order, I'll need to buy extra fabric. I'll need to pay my employees extra. I'll need to rent an extra machine. I'll need to do this. I'll need to do that. I might not be able to deliver to my regular customers, I'm going to be losing money there. So you have to take notes of all those incremental costs that will occur if you add costs, if you add to your regular production level, right? Then there are also avoidable costs, right? So okay, take for instance, you decide that you want to discontinue a line. Maybe people don't really like that dress anymore, they don't buy it anymore. It's a relevant cost, or it is relevant, because when you talk about it, if you decide to eliminate that production line, you're no longer going to be incurring that cost. That's going to be increasing your profit, or you can channel it to a product that actually sells very well or gives you more profit. Do you understand? So that's another type of relevant cost. Then opportunity costs, I'm sure you'd have heard of opportunity costs very well. There are benefits forgone by choosing one alternative, and they are very important costs, right, in decision making. Now, we also have future outlay costs. As I said, they are futuristic in nature. So they are costs that, okay, you've planned, they are yet to be incurred. Yes, you planned for them, but they can still be avoidable. You can still decide that I don't want to incur these costs any longer. Do you understand? So that's another type of relevant costs. I'm going after this, after explaining irrelevant costs, I'm going to give a very short example or a very short scenario, and we'll try to determine the relevant costs that are necessary to identify them. Now, irrelevant costs, the opposite of relevant, they do not differ like among alternatives, and they do not affect decision making. What I mean is this: whether you decide to take that decision or not, or whatever you do, you've already spent it or you will spend it. So it's just like that list that I mentioned that time. You've already entered a contract that you're going to be paying a certain amount for the next 5 to 6 years, right? So whether you decide that, oh, during this I want to host a party at the office space, or I want to employ more people, whatever you decide to do, you will pay that list. Do you understand? So it is not relevant when you are making. So if a customer comes down, they say they want to make extra, give you extra orders. You cannot say, if I just, yeah, because you cannot say it does. Whether you decide to accept that order or you decide to reject the order, it does not affect the fact that you will pay that list. So one, they are common to all alternatives. They are unavoidable regardless of choice. Unavoidability. That's one of the major characteristic of irrelevant costs. So you cannot avoid them. You've either already spent them or you will spend them. You've entered a contract to spend them. So you cannot avoid them. You cannot take a decision that will make you not spend them. And they do not really affect whatever decision that you decide to take based on other things. And they are sunk. Sunk cost means costs that you've already spent, costs that you've already lost. Right. So you've already paid rent, you've already paid for certain things. If, for instance, you buy a machine that, okay, you bought a machine last year that you use regularly for operations, and then a customer comes and is like, I want a special order, and you need that machine for it, you cannot classify that machine as part of the cost again, because you've already bought that machine. Whether you accept the order or you reject the order, you've already bought the machine. That money is gone. Then okay, there are also non-cash items that might be relevant to it. So it's not always just quantitative, there are also qualitative factors to look at. So okay, now the types are similar to the characteristics here. You have sunk costs, committed costs, as I mentioned, like the lease. Do you understand? Or maybe you paid to government to explore a particular place for a while to look for oil. You've already paid it. So it's something you've already lost. Then non-differential costs and past costs. So costs that have already you've incurred in the past that you've already bought, whether you need it now. Like maybe you, like as with the machine example I used, you already bought a machine. Doesn't matter that now it is now you need it. You've already bought it. So whether you decide to take that contract or you decide not to take the contract, you've already bought the machine and that money is gone. So let me give a short scenario on these costs, on relevant and irrelevant costs, to see or to test how you understand it, how well you understand. So I'm going to be using a scenario here of let's see, a make or buy scenario. A make or buy scenario. So we are a fashion designing company. I'm still going to use that we're a fashion designing company. And what we do here is this. We usually make t-shirts, right? Let's assume we make t-shirts. So all these t-shirts that people use for say birthdays and things, we help them inscribe their names on it and use that. Do you understand? Now, for the past how many years we've been buying the t-shirts. Like we'll go to an external contractor and we'll buy it from them. But then one of the board of directors now decided that what if we decide to start making those t-shirts ourselves before we inscribe things for people? What if would it not reduce the cost? Like because what if we go out today and this because he talked about factors like the supplier not being able to deliver or them delivering things that are not quality enough. So what are the costs you think that we need to take into account when we are trying to decide that should we go ahead should we start making it ourselves or should we keep buying? What are the things that you think we should consider? Are you still with me?
Ma, please can you come again?
Okay. Okay. So we have a business where we supply t-shirts to people that want to use it for an event, right? So maybe they want to use it for a political campaign or a birthday or something, and they just want their, those t-shirts that will have names on it, maybe a burial that they write Adieu Mama and things like that. That's what we do. So for the past how many years since when we started the business, what we do is we go to those manufacturing companies that their own business is to just make plain t-shirts. We'll buy plain t-shirts from them, and then we will now come and inscribe it and sell to our customers. That's what we do.
Okay.
But then a top management now decided that what if we start buying fabric by ourselves and making the t-shirts instead of going to buy from those companies? That those companies are cheating us. They are selling low quality to us. They are doing this. So it's like, okay, so what as a cost accountant now, you have now been told that, oh yeah, which decision is more like is better, which decision is profitable, which decision is better for us. So what are the things you will consider in
Um, like the price of the fabric if you go to the market,
okay. Yeah,
prices, the cost of sewing, like other expenses of the thread and all that, the
okay,
costing of prints.
okay. No, now you're not going to be thinking about cost of prints. You know that you already print. That's something you do. Yeah, you're thinking about just making that t-shirt that you will print. So
Okay.
yes, the fabric. But you don't usually buy fabric, Abby. You don't buy.
Yes.
So you think about the fabric. You think about now. Let me bring in one this thing. So you already have employees, right? You have a lot of employees that inscribe, but then these employees, they said you now have those ones that already have the expertise. They already know how to sew the clothes, right? You don't need to bring in a fashion, you don't need to bring in a designer again, you don't need to bring in anybody that will be operating that machine. So do you think the cost of labor is also relevant to deciding whether to make or buy?
Yes, I think it's relevant.
Why is it relevant?
Because we still have to pay them at the end of the day.
No, I mean you're already paying them. You already pay them. Say for instance, let's take you as listen, let's say you are one of those people. So you usually receive 500,000 naira a month, right? For just inscribing on t-shirts. And then so now we're not saying if we're not going to add to your salary, we are going to start making and you'll be the one helping us making since you have the expertise and you know how to make it. Do you think it is a relevant cost?
Since they're not increasing the payments,
Yes.
and it should not be relevant again.
Exactly. So it's no longer be relevant because you're not increasing the payments. Had it been maybe we are saying if we bring you in now or if you want to start making t-shirts for us, we'll increase your salary to 700,000. And that 200,000 is what you consider as your relevant cost, not the entire 700,000. You'll be looking at that 200,000 alone. Because if we decide that we are not going through with the decision to make the t-shirts by ourselves, you still continue collecting your 500,000. Do you understand?
Yes, so
Okay. So do we understand relevant and irrelevant? Are you with me?
Yes, ma.
Okay,
Ma?
do you have any questions before we
No,
continue?
ma.
Oh, okay, please mute your mic so that we'll continue. Thank you. Okay. Now, sorry, give me a second. Okay. That is according to relevant and irrelevant costs. And then we also have controllable and uncontrollable costs. That is another classification. So, controllable costs are costs that can be influenced by the decisions of a specific manager within a given time. Personally, I like to define controllable costs as costs that you can, should I say, you can avoid them. Like I like to think of controllable costs as avoidable costs or costs that they happen because someone was there, right? They are costs that if someone does not incur them or someone does not, yeah, they are costs that they are not beyond your control. They happen because you decided to produce, right? It's yes, it is influenced by decisions of the manager within a specific time. So those are controllable costs. Now examples of them are, take for instance, okay, over time, for instance, over time. If you have, let's say you normally you use 10 hours to produce a certain product, right? But then something happened during the day that you would have been able to, you would have given the you'd have taken the decision to make sure that that idle time did not happen. You need 10 hours to produce in a day, to produce a certain number of items in a day. But then during the day, instead of using those 10 hours for production, maybe you allowed your employees go for extra breaks or something, right? And then at the end of the day, you did not hit your quota. You now had to spend more on overtime, because if they are going to wait after like closing hours, you're going to pay them for overtime. So you now ask them to wait overtime. By doing this, you have increased like the cost that you were supposed to spend, and this is something you would have controlled if you did not like let them take extra breaks or breaks that were not needed during the day, if you controlled those idle time. So that's an example of controllable costs. So there are costs that they happen because of things that were not out of your control. They happen because of things that you would have taken a decision to make sure that they did not happen. Those are controllable costs. However, uncontrollable costs are costs that you cannot necessarily control. Take for instance, you are doing production now. Um, the power went out. Yes, the power went out, and okay, no, that's not actually a good example, because if the power went out and you normally have generator or solar or something, so that's still a controllable cost. You cannot use that as an excuse for losing that money. So here, okay, corporate headquarters allocation. So there's probably an allocation that comes from the head office, right? For everybody, you have to walk around what you are giving, the resources that you have to manage it. So if there are costs that you had to incur because those resources were not enough, that is beyond your control. It is now left to managers, right? Sorry, to um top management to control this. But as a line manager yourself, it is out of your control. It is an uncontrollable cost to you, so you are allowed to incur it. Do you understand? Now, how do we treat controllable and uncontrollable costs? Controllable costs, in most cases, they see them as you deduct them from profit, not your manufacturing cost. Let me explain. So, if for instance you are supposed to spend 100,000 on production, but because of something that you did, something that you would have avoided, something that like happened because you were negligent or because you took a wrong decision, you now ended up spending 120k. You cannot go out and tell you cannot go and tell the top management that production cost 120k. No, you tell them it cost 100k, and then you now tell them that there was a loss of 20k that happened due to this. So when they are planning, so that they know that okay, it's not that, because if you tell them production costs 120k, when they want to price it to customers, they'll be pricing based on that 120k and not the actual 100k that it should have been. But when you talk about uncontrollable costs, these are things that you could not control, right? So those ones should be part of production costs. Those ones you should be able to say, okay, I know that we planned 100,000, but then things happened that we should have actually taken into consideration at the beginning. Things happened that were beyond my control, so we have to add those ones will be added to production costs. Do you understand this? Are you with me?
Ma.
Yes, ma'am. Okay, can I continue?
Yes.
All right. Now that those are controllable and uncontrollable. Now the last classification that will be okay. No, there are a lot of classification of costs actually, but
Maybe
because
like
of
one girl that is in this
and
nonsense that she's just in 300. She was in 300 level microbiology. Maybe I'll coach it on.
Abida, please can you unmute your mic? Can you mute your mic, please? Thank you. Okay, so you can read all other classifications of costs from the notes that I will be sending. Because of time, let's move to cost segregation and estimation. Now, cost segregation means separating mixed costs. That's what it simply means. Because you remember I mentioned mixed costs being costs that contains both fixed and variable elements in them. So the process of separating them so that you'll be able to make decisions is called cost segregation. Right? It's called cost segregation. And there are a lot of methods to separate this, which we would talk about in later weeks. In detail, we'll talk about this in detail in later classes where we would have like major calculations and we'll take questions on them. But for now, cost segregation is the process of separating mixed costs. That is, you separate the fixed element from the variable elements and you try to, make decisions based on the ones that you can actually influence. You have four major methods of cost separation. There is the high-low method, the scatter graph method, the least squares regression, and engineering method. We will look at all of these in a later class. And cost estimation, on the other hand, cost estimation basically means trying to, from the word estimate, you're trying to derive, yes, the cost that you spend. Or you're trying to place a specific amount on certain activities. So there are different ways to do it. On one part, you might decide under the account analysis method, this one makes use of your judgment. So you can examine, in both cases, you examine your books, right? You examine your books, okay, this is the cost I incurred in previous years or in previous production processes, right? But then under the account analysis method, based on your judgment, you're the one that'll say, okay, if this happened and Nigeria's inflation is currently 15% per annum, that means next year I'll just add 15% to it. And that's it. Do you understand? So that's just account analysis method. But for quantitative methods, here you use more like mathematical methods. So you can use time series analysis. So you look at it, okay, in the previous year, you make graphs, you see that at a specific period, maybe during rainy season, sales went up or it went down, and then during the dry season it went up or it went down. You look at patterns, you look at the way things happen over specific year. So if that same pattern happened like 4 5 years for like 4 5 consecutive years, you say, okay, this is a pattern I want to follow, right? Or you can use learning curve estimation. So you look at how well employees get efficient over time. So this because employees have done this for 3 4 years, they're able to do it faster. Something that used to take them 2 hours before now takes them 1 hour. So you can use that to estimate the cost. So that means next year are going to be spending less because they can produce more within a shorter time. And then for econometric and multiple regression analysis are also statistical methods of estimating costs that you now use in your budgets. Now, yes, exactly. So the purpose of cost estimation is for you to be able to prepare your budget. So you want to before because the main reason why we prepare budget is to see our expenses side to side with the incomes that we are expecting. So you already have your income, your expected income here, but then to be able to get that expenses, you have to estimate your cost, and that's why we use cost estimation techniques. Then for product pricing as well. So maybe you have a target profit that you want to hit, right? Maybe say 20%, 30%, or a specific amount, or you just want to be able to pay or to cover all your running expenses, right? So it is after you estimate your cost that you'll be able to put an appropriate price on your product. You also do cost estimation for performance evaluation. So if you have used a reliable method to dictate to determine how you will incur costs in the coming year, you use that to evaluate how well your employees are doing. If you go above it, you have to analyze what happened. Were there things that the employees could have controlled? Are they efficient enough, and vice versa? And then you also use cost estimation to make decisions and to bid on contracts as well. Yes. So if you are receiving a contract, it is after you estimate costs that you'll be able to to be able to decide which customer you should be taking the contract from, or whether it's a contract that will be profitable to you. Do you understand that?
Ma, please, can you come back? I didn't understand that speech.
With which one?
The one you talk about purpose of cost estimation. I talk about budget preparation and the likes.
Okay. Okay. So the purpose of cost estimation. All right. So I said cost estimation is basically putting a price on the activities that you intend to undertake, right? Okay. So why do we do that? Why do we want to know how much we will incur? Why do we want to know our expenses for a forthcoming period, for a period that has not happened yet? That's what we're talking about here. So first, I said budget preparation. Now, to be able to prepare your budget, you don't just come up with a budget. You don't just say, this is the amount for transport, this is the amount for materials, this is the amount for salary. There are things you have to look at. Take salary for instance. You can only you are going to be you're going to be budgeting for salary based on minimum wage laws, right? So it is through minimum wage laws that you are able to estimate your cost in the first place. So basically, you are using cost estimation to prepare your budget to be able to determine the profits that you make the following period, to know whether the following period is going to be a deficit period or a surplus period, right? So that's one of the reasons why you do cost estimation. You do cost estimation to gather all the costs you incur, and then you'll be able to put them side by side with your revenue and make decisions from there. And another reason why you do cost estimation is to be able to price your product. So after estimating the cost of making a product, say for instance a dress, you estimate how much a fabric will cost, how much you pay the designer, how much you buy all other components that will be put together to make that dress. After you estimate that, it is then from then that you now decide how much you charge the customers. Do you understand? So that's product price. That's another purpose of cost estimate. So you estimate cost to know how much to charge your customers. You also estimate cost to know how well your employees are performing. So if you estimate the cost and then it's fairly reliable, you have estimated that you're not supposed to spend more than a certain amount, but then you now see that your employees are spending more than that. You use because you've estimated cost, it will help you to evaluate them. Is it that they are overspending? Is it that you were the one that made a mistake? Is it that you did not take into account some things? Basically, it is just to help you plan and to evaluate efficiency. And then, yes, decision analysis as well. So you want to make, after performance evaluation, you want to be able to take decisions like, do you need more employees here to assist, or do you need to put somebody else in charge of negotiating with suppliers and things like that? And then lastly, contract bidding. So you estimate costs to know how much you are spending, you're incurring on something, right? So if a customer comes and say, I have a contract for you, I need you to make 50 dresses for this school, right, for their end of the year party. It is a contract. You do cost estimation to know how much you're going to spend, so that you know whether what that customer is offering is enough. So if they say they are offering you 500K now, you want to know whether you're not going to spend more than that 500K. You want to know that you're not going to make a loss, and you're going to make a very good profit from it if you take it. That's what we use cost estimation for. Do you understand?
Yes, ma'am.
All right. Thank you. Now let's talk about cost codification. Hmm. Now, it is nothing big. By codification, or what we mean when we talk about codifying something is basically giving a code to it, attaching a code to it so that you it will be easy to trace. Take for instance, in school, I'm sure in your universities you'd have, each of your courses will have their codes. You have course codes and you have course titles. So say introduction to accounting, they might call it ACC 111. Do you understand? So those codes are there to help you be able to like trace them easily instead of like making the whole process cumbersome and all. So cost codification basically are used to simplify the way you record and retrieve costs, right? It will facilitate data processing if it is easier to trace them, and it will also enhance reporting accuracy and consistency, because today you might buy a product and it will have a different name because it comes from a different brand and all of that. So instead of that, you just like give a code to all of them and put them under the same place, so it will be easier for you to control, for you to monitor, and for you to report. Uh, there are some methods of codifying costs. The first one is mnemonic coding. Mnemonic coding. Under mnemonic coding, you use alphabets to like suggest. This is like a very common one. It is very simple. It is easily understood. The moment you see it, you know what it is if you are used to the process. So an example is, for instance, using FAU instead of factory administration units, or maybe instead of administrative department, you say ADM, or direct material. Like look at you can see, please look at it. I'm going to send the notes to you and you can see. You can also research on other examples of mnemonic coding, but basically mnemonic coding is using alphabet. So it could be the first letter, you just shorten to make a code for it. It is easily remembered, it is understood easily, and it reduces training requirements. However, the limitations is that it is not really flexible, because imagine, like, what if something else comes in that has FAU as the first letters? What are you going to do then? Are you going to change? Like, are you going to now use the second letters, or what? Do you understand? So it might become a problem in future. It is, yes, it's also difficult to expand systematically, because there is only a limit. There's a limit to the number of things you can remember as a person. So by the time you have different things that like you are coding, there's a limit to what you can put in your head and what you can remember immediately you see a code. So that's where numerical coding comes in. Numerical coding like means using numerical sequences to represent hierarchical relationships. So for instance, you can have, when you hear one, maybe one means direct materials, but then you can now say 1100 might now be um raw materials, and then you can go for that, say, okay, what kind of raw materials? Maybe metal. Then you can go for that, say, what kind of metal? Steel. Do you understand? Like it's like a hierarchical relationship using numbers. But then the thing is, you just know that whenever something starts with one, it's just like your courses in school too. So whenever something starts with a course start with two, you know that okay, it is a 200 level course. If it start with three, it is a 300 level course. So it now goes further. If you hear 3-1 something, maybe one is first semester. But if you hear 3-2, maybe two is second semester. Do you understand? So like that, that's numerical coding. And yeah, so the advantage of this one is that there's unlimited expansion. So like, unlike the problem we had with alphabetic or mnemonic coding, this one can go like, because there are infinite numbers that you can use to code here, and it is easy for data processing. And that's now there is potential for coding errors, because it is very easy to put one where zero is supposed to be and put zero where one is supposed to be, and next thing you're having a big issue. Now decimal coding is similar to numeric coding. The only difference here is that you're using decimal points. That's really the only difference here. So here you're using decimal numbers, but in numerical coding you're just using numbers straight. And then you have block coding. So you have, in block coding, reserved number blocks for different cost categories. So here you have an example is you have 1 to 999 for direct materials. So anything direct material can be given that number. But whenever you see the number, you know it falls under direct materials, right? So each like it is clearer, right? There are boundaries for each category. It is easier to learn and apply, and it minimizes cross-category errors. Because whenever you see a number, you know what category it belongs to. Now, for you to be able to design or for your codification to be effective, there are certain principles you should have in place. You should make sure it is something that is easy to understand and apply, that it is something you can easily adapt to organizational changes. So it's not that when things are changing, you have to totally change it. It should be able to, it should be editable. Then comprehensiveness should cover all cost elements. So it's not that it will cover direct material and direct labor and it will not cover indirect or something. Expandability, it should be able to accommodate future growth. So organizations should operate with the mindset that they want to grow in the future, right? So you should be able to, like, when whatever system you are designing, you should be able to accommodate whatever growth you want in the future. And in clarity, yes, it should be unambiguous, just like simplicity. Okay. Um, I would like to believe we have covered majority of this. I will send your assignments to the group chat. I will send your assignments to the group chat as well as the notes. But please ask me questions. Do you have questions?
No, ma.
Are you sure? Is everybody sure you don't have questions? Do you understand?
I have a question, ma.
Please ask your question.
In what cases can we use some of those codification? Is it in term of maybe you want to prepare an account? Can we use those codes in there?
It's not necessarily to, thank you very much for that question. It's not necessarily to prepare accounts. It is, to help you record. The first step in accounting is recording. So when you're collecting information, take for instance, you're collecting information on the orders that you place to suppliers and everything, or you're trying to collect data, sorry, on both the information, the orders that you place and the orders you receive. So in order to be able to trace them very well, it's just for recording purpose. Cost codification is basically for record purposes. So it's after you have your records that you now be able to prepare accounts. So yes, they will help in the long run. Those records will help you prepare the accounts that you want to prepare or the reports that you want to prepare. But cost codification is to assist you with recording in a systematic and structured manner. Do you understand?
Okay, yes, ma.
Does anybody else have a question? Sorry. Okay. I will take your silence as no, and I will send your assignments as well as the notes to be received next week. Yes. So I will send you deadlines as well as the deadlines. I'll send you assignments, the deadlines, and then we'll have the correction at the beginning of the class before we take our next topic. Is that fine?
Yes, ma.
All right.
Yes,
Thank
ma.
you. Thank
Thank
you
you.
very much for coming. Thank you very much for joining the class.
Thank you, ma. Thank you for the class.
All right. So you can exit now. Thank you.
Okay.